Upon fund launch, we will receive a capital commitment from investors. Capital commitment represents the total amount investors agree to contribute to the fund, while unfunded capital represents commitment not yet called by the fund. Normally, there is no formal accounting entry at the time of commitment. We put memo entry for tracking commitment. In our business plan, we have 3 capital calls. Now we're going to book all the capital calls. After the capital call, we're going to track our unfunded schedule. First of all, based on the budget, we have the date here. Before the capital call, we would like to book the receivable. Once the cash is received, we're going to book the cash received. So on January 1st, the fund issues a $1 million call. Here's the entry. We're going to debit capital contribution receivable $1 million. This is to record the capital contributions receivable. And then we're going to credit investor contributions $1 million. And when the cash arrives on January 15th, we're going to debit the cash $1 million and we're going to credit capital contribution receivables. This clears the receivables and reflect cash inflows. And for the second capital call, under the $4.6 million AI company, we are going to book the receivables in January 15. That is probably the date we send the capital call notice. And then we are going to book the day we receive the cash here. Then for capital 3, we're going to repeat the process. We're going to book the receivables when we send the capital call notice, and we are going to book the cash when we received. And now this is unfunded schedule based on the capital call schedule. By the end of January, since we already had 2 capital calls, we have our cash and cash equivalent $5.6 million in January. Since our receivable is $50 million based on the commitment, we have the unfunded balance $9.4 million. So this is the same in every month until May 31st. Because in May, we called $9.4 million. That is in capital call 3. After this capital call 3, unfunded balance is 0 after May and going forward for the rest of the year in this case. So the key takeaway is unfunded balance is the total commitment minus capital called. And once our capital is called, unfunded balance hits 0. Always reconcile this with your investor capital account. As I mentioned, all the entries I booked will flow into my trial balance. Now let's go to see how the numbers reflect on the financials. This is my first capital call. And this is the second one. This is the third one. And on the trial balance, we can see we have investor contribution $5.6 million in January. So these reflect the first and the second capital call here. And then in May, our contribution would be $9.4 million. So this is how these entries flow to the journal entry tab and then reflect on the trial balance. And then this is our balance sheet. By the end of first quarter, we have a capital contribution $5.6 million here. And then after the May capital call, we have $50 million total contribution. This is contribution amount reflected here. In addition, the capital call amount will be reflected in our investor allocations as well. Since we have set up GP interest 1% and LP's interest 99% total, when we call the capitals, we will call $150,000 to the GP, and then the rest 99% will be allocated among the 6 LPs. So this is a total $15 million capital cost. And then on the capital account statement, we'll have capital contribution set up here. These are how the numbers flow, starting from the original business assumption. Then we book the entries, then the numbers reflect on balance sheet, change in partners' capital, cash flow. These are the capital contributions, cash flow from finance activities, and the $9.4 million here, and the total capital contributions. And then these are the numbers reflected on our investor allocations and the capital account statement. Next, we're going to book our investment entries.